Hi everyone. First of all, may I welcome you all here this evening. It's good to see that we've got quite a few newcomers that have joined us, and I welcome you to our presentation, and I hope that you enjoy what you both see and hear. Please be aware that you're more than free to ask any questions. I may not pick them up immediately, but I will do my best to pick them up as soon as I possibly can. Now, first of all, I would just like to draw your attention to our disclaimer. It is there for a reason, and obviously for those of you that haven't seen it before, take a quick glance at it, please, and be aware that anything that we say in the broadcast within our webinar is for educational purposes only. Now, during this webinar, we're going to cover examples of a unique trend indicator. We're going to cover the 3 biggest mistakes that traders make, and we're going to then show how we can put it all together using our price action trading method, and especially the vertical bar trading pattern. Now, this vertical bar trading pattern, it's the only pattern that occurs at every top and bottom. Now, a little bit about myself, obviously to give me the reason that I'm sitting here giving to you a demonstration about trading and demonstrating our unique trend indicator. I'm sure you'd all like to know a little bit about me and my trading history. I first began to trade derivatives just about over 20 years ago, and I had my first delve into this financial stock market trading was quite a few years before that, and it was an outright share purchase, and it was a penny share that done very well for me over a period of a couple of days. But like many other people, it was based on what a friend or a business associate that I knew in our local village back in Northern Ireland had been telling me how well he'd been doing a particular share, and I asked him that if the opportunity arose again, would he mind passing on that information, and lo and behold, a few weeks later he did indeed, and it worked out very, very lucky for me, and that gave me the bug of financial trading. And then I delved into buying other shares, and again, unfortunately, the 1987 stock market crash came, and I was sitting high and dry with shares that I owned for quite a while, and some shares that I sold with a loss. Anyway, my experience or my adventure into derivatives trading firstly began by trading the options markets and then the futures markets. And I have to say that the options markets were pretty kind to me at the very outset, but it was just straightforward options trading. Options in its own right is quite complicated, and there's a lot of strategies that can be used for options trading, but at that particular time it was just straightforward calls for the market to go up and puts for it to go down, whether it was in a particular stock or whether it was actually trading the FTSE 100 index. And then, as I say, as you can see in the slide here, my next adventure was into the futures markets, and in those days the futures and the FTSE 100 futures market, each point per contract value was £25 per point. And again, in those days, it was all through a broker and no internet. When you wanted to do your trade, you had to lift the phone and you had to say, buy me one of this or sell me one of that, and whatever the case may be. Of course, latterly, as we all know, there has now been a great amount of spread betting companies that have appeared onto the scene, and our options now are so much greater as far as the retail trader is concerned. And again, the FTSE futures market on those days, as I've already said, was £25 per point, is now down to £10 per point per contract. And they've made it more user-friendly for the retail trader. Now, when I started out, first of all, I made lots of mistakes, and I attended many seminars looking for a methodology in which we could use, or which I could use rather, to try and trade successfully in the markets. Now, I have to say that the seminars that I did attend were very informative in relation to giving me the tools to trade, but to be quite honest, I came away from each seminar still scratching my head because none of them had ever given me a methodology. There wasn't a methodology. When I say methodology, a method from which I could take signals such as buy signals or sell signals from. But I have to honestly say that I was lucky enough to have been introduced to a professional trader in America whom had developed many trading systems for large trading houses based on price action. And when I say I was lucky enough to have been introduced to this guy, this was quite an eccentric guy. He was a person that wasn't widely known as far as the public were concerned, or certainly the retail public. But I was lucky enough to have got been told about him and made contact with him, and whether he took a liking to me or not, I don't know, but he took me under his wing, and lo and behold, he certainly became a mentor. And it is said very much so when you're trading the markets that you do need to look up to a mentor, and he was the mentor that I needed to look up to because he was the person that gave me so much information, taught me the methods, and also enabled me to go on and trade the markets for so long, and may I dare say it, been reasonably successful, thank goodness. Now, as far as trading is concerned, there are two ways to trade the markets. There are trend trading methods and there are non-trend trading methods. Now, what are non-trend trading methods? Well, non-trend trading methods are something probably that we have been taught from a very young age, and that is to buy something cheap and to sell it high. Now, the problem with doing non-trend trading methods when you're financial trading is that means that you're inclined to try to pick tops and pick bottoms, rather. I was saying click there, apologize. Pick tops and pick bottoms. Very, very, very difficult to do, can be very, very, very costly. And unfortunately, there are quite a few indicators such as oscillators, such as RSI, such as cycles, etc., are all based on non-trend trading methods. And if any of you that have been trading the markets and have been using indicators such as relative strength index, the RSI, and price oscillators, etc., you will quickly realize that when a market or a particular instrument starts to trend, it will stay very much in an oversold, or if it starts to, or an overbought situation. And you wonder, therefore, if you're using those particular methods in a trending market, you will find that you're going to be quite literally wiped out very, very quickly. Now, yes, they will work on a sideways moving market, but on a sideways market, really and truly, it's an exceptionally hard market to trade, and always will be. Even if you're using options to trade sideways moving markets, it's an awkward market to actually trade, because all of a sudden the market breaks out of the particular range that it's in, and your options that you've perhaps written at the top of the band or at the bottom of the band are now in the money, and you're caught quite considerably, very much on your bare feet, so to speak. So trend trading methods, and let me assure you that as trend trading, it's the only method that works. Now, we can demonstrate this, and I have pointed out recently in an email that I sent out, and it is true. I'll go back to 1992 when the Bank of England, on what they called Black Wednesday. I think it was the Wednesday, not the Monday, and they were coming out with the exchange rate mechanism, the UK government, and they were trying to prop up the pound when everybody was trying to sell the pound. And now when the Bank of England can push in billions and billions of pounds to try and prop up the pound, and it kept sliding, and yet the likes of some of the top traders in the world, such as Soros, etc., reportedly making $1 billion out of it. I think it tells its own story, that never to fight the trend, never to try and pick a bottom. Look at poor Nick Leeson. I don't know if any of you know the story about Nick Leeson, but again, that was very much his final demeanor came by trying to move the market himself, by trying to put a bottom in place by using buying power, but it didn't work. I'm sure if any of you have seen the film, quite an interesting film, but I've also read the book and I know exactly what he was trying to do. He was trying to move the market himself when the Bank of England couldn't do it, and Nick Leeson was using Barings money to try and do it with an awful lot less. And once the market realized that it was him, and really and truly the market was going down, he was caught really big time, and we all know what the outcome of that particular story was. So let me assure you, trend trading is the only method that does work. Now, learning to trade using price action made an immediate difference to my trading. I honestly mean that. It made an immediate difference to my trading, and I could steadfastly say that anybody that's on our webinar tonight and is not aware of price action, it is certainly going to make a difference. If you do decide to learn our methods, I'm pretty confident that you will also realize that it will make a big difference to your trading. There's no question about that. Now, why did it make a difference? Well, firstly, I now had a methodology from which to take trading signals with very clear trading rules from. That was the first major difference. I now was able to go and say, right, there's more buying pressure than selling pressure. This particular instrument should go up, or there's more selling pressure than buying pressure, therefore it should go down. And secondly, I was able to trade with the trend based on the price action of that instrument. Now, at this stage, everybody hear me okay? And we are all making progress, yes? Good. If there's any problems, please just put them up there and I will try and pick them up, so I will. Now, I first started to teach others to trade this method over 17 years ago, and there was a simple reason why I decided to do this. And that was because I, as an individual, personally had struggled with a methodology to trade the financial markets. And then when I learned price action, and it had done so much for me in such a short space of time, I then quickly realized that there are bound to be others out there looking for exactly what I was looking for. And when considering that I had something very worthwhile learning and showing to others, that then gave me the idea initially of being able to teach this methodology to others, and that was some 17 years ago. Now, trading the markets using price action is very powerful. I've already said that. And let me start by telling you this, that it is not complicated. However, there is some learning to do. Yes, there is a little bit of learning. It's not complicated. You're not looking for something, you're not looking for a pinhead in the middle of a haystack as such, far from it. But to learn what it is actually telling you to do and the different scenarios and the different setups, there's a little bit of learning. But once you get it, once you grasp it, it's there forever. And the good thing about the price action trading is that your signal and my signal will always be the same. There's no such thing as some of our members coming on to me and saying, Ian, I got a buy signal, and me turning around to them and saying, well, hold on, I've got a sell signal, because providing we're trading the same instrument on the same time frame with the same price data going into that instrument, our signals will be the same and our analyzation of that particular signal will be the same. Now, my aim for some time was to try and develop an indicator that would make this approach even simpler. And this process has now been completed with the launch of our STB trend indicator. And it is a simple visual indicator that paints price bars red, blue or green. Now remember what I said, it is trend trading that works. And the whole idea of trading price action with the trend is getting into the direction of the new trend as early as possible. Excuse me, and this is exactly what our unique indicator does. What it does is it gets us into that new trend as early as possible based on the price action that the market within that particular time frame is telling us are telling the indicator. And what the indicator does, it evaluates the sum total of the buying and selling pressures within that market. And with the sum total of both, it evaluates whether there's more buying pressure, that will paint the bars blue, or more selling pressures, that will paint the bars red. And what it does do, as it says here on the screen, is it does pick up this new trend as early as possible. Now, because it takes a little time for the buyers to overcome sellers or sellers to overcome buyers, it's never going to get you in at the very bottom, because remember, that would be non-trend trading. That would be trying to pick tops or bottoms. What we are actually doing is trying to get in to the new trend. And remember what a trend is. A trend is buying high and selling higher, or selling low and buying back even lower. That's what a trend is doing. We're trying to get into a trend, a new trend, as early as possible, but one that has already started to make the move. Now let us look at some examples. This is the FTSE 100 on a 15-minute time frame chart. Now this chart, as you can see in front of us, was showing over 70 points of open profit. And that was from the first bar that turned blue right the whole way up the screen. But again, what we do teach our members is not only do you get into the market at the very beginning, but we also look for a confirmation based on our trend. And it's the vertical bar trading pattern trend that actually confirms whether we go long, such as this scenario, or whether we wait until we get a confirmation. And this is why it gives us this edge in the marketplace, to reduce our risk from the outset and to get us in at the most opportune time of the new trend forming. Now let's look at another chart. And this particular chart is on Vodafone. And the reason I'm showing the different charts and the different instruments, because our indicator is versatile in as much that it works on any financial instrument. Providing there's buying and selling pressures within that instrument, the indicator will work, and it will work exceptionally well. Now, where it will become a little bit unstuck, as any method, is if a market goes sideways. And remember, that is non-trend following methods. But we're looking for the trend, because from a trader's perspective, I'm sure many of you have heard, cut your losses and let your profits run. Well, you only can let your profits run if you're able to trade the trend. Now, has anybody got any questions, or have I missed any questions at this stage? Let me just check. Paul, the average length of a trend, that is quite difficult, because every instrument is different. And the good thing about trading price action is that you're trading what you see in front of you on whatever time frame you choose to trade on. So therefore, it's like, for example, yesterday evening, I was speaking to a fellow trader through Twitter. And as you know, if any of you have seen it, I had been doing some trading on crude oil, and I'd been doing it on an account that I showed a live trade as well as my own account. And he asked me, where did I think the bottom was in crude oil? And that, again, now don't get me wrong, yesterday evening, crude oil was coming to make like a double bottom, but it transpired with our conversation some 5 or 6 minutes later, and fair play to the guy, he came back to me and he said to me, well, I have brought crude oil at $41 a barrel. Now, at that particular stage, it was trading at 40.48 or 40.47. So he was some 50 points behind where he had actually bought it, and he was still in the trade. But he was asking me, in my opinion, was there a bottom now coming in place in crude oil? My simple answer was, trade what you see. And if we all trade what we see, and we have a methodology from which to take our signals and from where to place our stops, because that is the key point in trading, which we will talk about very shortly. Therefore, then you should be worrying about, is it going to end or is it not going to end, because you should be trading within your comfort zone based on a particular methodology or on a particular signal, and you should also know at the very time that that signal is wrong. In other words, if you're buying, you should know at the very point where that buy signal has not worked out for you based on your technicals. So I hope that answers that, Paul. Every instrument is different and every time it's different. So therefore, you could have a large trending move today, or for example, yesterday was a great trending move in crude oil, and today there's not such a good trending move. There was a small move earlier in the day, and I don't know what it's done very recently. And the same can be said trading the British pound. The euro dollar today made a move, but it wasn't a large trending move. Tomorrow it could make a large trending move. So again, it's very important that you just trade what you see. In relation to, do I set targets? I don't necessarily set targets because I do want to let my profits run. But let me tell you this, and I think for those of you that have not heard me speak before, remember what you have to do is you have to let your profits run if you can, and that is key to being successful. But also, you will never go poor or fail by taking profits. But to mix it up with something that we will speak about very quickly in a few minutes' time, is based on your risk to your reward. Because if you let a trade go again, you say 50 points, and all of a sudden it comes back in your favor by 10 points and you take the profit, lo and behold, you've got your reward to risk ratio the complete wrong way around, and that eventually might have let you out of a hole this time, but it will not let you out of the hole going forward. So in relation to setting targets, what you can do, Paul, and what I often do in relation to a market, if you see a market that has been reasonably difficult, and I mean it has not been making large trending moves, sometimes I would drag my stop up pretty closely behind my trade. Now, my stop would always be at a strategic place as far as price action goes, but I would drag it up pretty closely behind. So that would probably is a way of setting targets, but I don't necessarily come out at a particular target. No, I don't. I certainly don't. And again, I think there's a question, is there a break in the voice, Mike? Is anybody else got a problem, or has my voice cleared up? If you don't mind just putting a yes or no. Everybody can hear me clearly, yes? That's great. That's superb. Right. If there's a problem, please, hopefully I'll see it. Now, we go on to look at another chart. So we will, and the next chart we're going to look at is GlaxoSmithKline. And again, you can see we got a buy signal here at 1375. The market went out of red, went into a neutral bias, went blue. Now, again, what's important is it's not just the blue signals, and it's not just our indicator, because up until recently, over the years, I've been trading price action, teaching people, price action, and also the vertical bar trading pattern. And it's just the indicator now makes things so much more simpler, and it makes you more focused on a particular chart. Certainly if you're looking at 3 or 4 instruments and you see an indicator going from one color to another, it focuses you in on that particular chart. But in this GlaxoSmithKline, we've been making lower highs and lower and higher lows the whole way up that particular market once the signal was there. And again, your first entry bar was quite good there with a very low risk. It's something that we teach. It's something that you will learn in the members area, if any of those of you that wish to join us at a later stage. It is there. It's very defined trading, and remember, it's all based on risk. This is a Dow Jones. So we've looked at a couple of equity charts. We're now looking at the Dow Jones and 60-minute chart. You can see where we got our red signal in here. The market fell quite rapidly, came back up, and it went into a neutral position, and lo and behold, if it didn't go red again, and at that stage, the time of this chart, it was 17,405. But again, there was a great signal there from 17,600. On those few hours there, over a couple of days, you're up 150 points. Now again, this is a buy signal in the US dollar, Japanese yen. Again, you can see coming out of a neutral bias to the left, buy signal. The market went a bit sideways, made a higher vertical bar trading pattern low once it retraced, and that market took off. And look where it went from there to there, a neutral bias. Again, it took off again. And look, you know, there was no looking back in that particular market. Now, some days be more difficult than others. There's no question about that. And this is why risk is very much something that we concentrate a lot on. And in relation to our trading signals, we also concentrate a lot on risk, because there's a methodology there. And with the methodology, there is also the areas of where to place your stops. And that there can determine exactly what your risk is going to be, if your risk is going to be within your boundaries, or if it's not going to be within your boundaries. If it's within your boundaries, you take the trade and you take the risk. If it's not, you wait for the next trade to come along. This is the Aussie US dollar. And again, look, another lovely sell signal the whole way down. The market went into a blue bias, neutral bias, but we're starting to make lower vertical bar trading pattern lows at that particular time. It went red, and again, for the few points that you lost around here, if you had been taking them, you certainly would more than have made up. And this is very, very, very significant, because every signal, I don't want to try and tell you, ladies and gentlemen, this evening, that every signal that our indicator is going to come up with is going to be a top class winning signal, because if it was that simple, I'd be a multi-millionaire, and banks would be giving me millions and millions for the trading program that it is. Now, as effective as it is, certainly at times it will not give the signal in the correct direction. But this is where price action comes in, and this is where the vertical bar trading pattern, it's it, and trade it in conjunction with the signal, that eliminates a lot of these otherwise trades that perhaps you may have taken if you're just taking the signal blindly on the color of the bar. And that's what gives us the edge. And it is a small learning process, but it is very worthwhile learning, and it also will give you the edge on any financial instrument, stocks, commodities, forex, indices. The exact same principle applies, exactly the same. Now, on this particular chart, what I want to look at is the US Canadian dollar on a 15-minute chart. And what I've just shown here is a chart with no indicator on. And what I would like to demonstrate to you, and I'm sure a lot of you will agree with me, when you see that chart, that's what I would have been teaching how to trade based on price action and price action alone in conjunction with the vertical bar trading pattern. But on the next chart, it's exactly the same chart on the same time frame, but with the indicator on. Now, do you see where it makes it more defined, where the buying pressure comes into that market compared to the chart with nothing? It's very plain to be seen, and this is just to show you how effective the indicator is. Now, another point I'd like to make in relation to our indicator, which is very important, and I would like you to please take it all in. And the fact of the matter is that our indicator paints a bar blue, red, or green. And that bar will stay blue, it will stay red, or it will stay green, whether that particular signal be a correct signal or an incorrect signal. So if you load that same chart up this time next year, you will get the same colored bar as you would get today. And the reason I say this is because there are unfortunately, there are indicators out there that are perhaps similar, or now I don't know of any in particular name, but I've certainly seen some in the past. And what, as effective and as good as they look when you're looking at charts such as this particular one here, historically, they look remarkably good. Then you start to go to trade them, and you take the indicator as it stands, point it blankly, depending on what it's telling you to do, whether to go long or go short. The particular trade that you take happens to be a losing trade, and that's okay, accept that it's a losing trade. But what you do realize later, that you've went back to the same chart, and that indicator that perhaps gave you a buy signal is now giving you a sell signal, because the market has reversed and went down. So what the bar has done, or what the indicator rather has done, it has actually repainted. In this instance, it'd be like repainting a bar, or it has repainted a particular signal. This indicator of ours is totally authentic in that way. And as I've said on many occasions recently, the internet is so good in so many ways for us. But there are some downsides, and the downsides are there are people that do try and exploit particular not only traders, but particular people within the world, whether it be financial trading indicators, or whether it be some other money making ideas, or whether it be something else. And unfortunately, they're not all authentic, and I'm sure you can share that. It's not just me saying that, I'm sure you realize that. But the downside to it being that such as ourselves and myself here, having put a lot of time and effort and many years of trading experience into a particular indicator, it does at times leave people wary, because is this something that is like something else that's not authentic? And it does leave people a little bit wary. So let me assure you, at this particular juncture in our webinar this evening, it's a totally authentic indicator, and the signals that you will get and that I will get, providing we've got the same data going into the charts, will be the same for everybody. So I hope that is clear for everybody. I'm just checking, have we got any questions? And I don't believe we have. No? Everybody happy? Righto. I hope I haven't missed any questions. Now, if I have, I will definitely come back to them, so I will. Right, let us continue. Now, when trading, it is important to have a guidance chart and a trading chart. And this is something I just want to show in the webinar tonight. But it is something that I don't expect you to totally take grasp of. But it is something I want to show, because again, it is part of our learning program. So it is. It is totally part of our learning program. And within that program, as I say, it's learning the price action trading method. And one of the methods that we use in relation to taking our signals and trying to take our signals on a shorter time frame trend in conjunction with the larger time frame trend is by having the two particular charts, the trading chart and the guidance chart, in sync. Now I just want to show you here what I have got. I've got a 5-minute pound dollar chart, as you can see, which is a trading chart, and on the bottom here, this is a 15-minute chart of the pound dollar. Now you can see that the 5-minute chart obviously is going to change out of one trend to another very quickly, whereas the 15-minute will take longer, and as the 60-minute will take longer again. But what you're trying to do is you're trying to trade with the trend. Now don't be confused, anybody, please, because just because I have a 5-minute and 15-minute up, that doesn't mean to say it's only in a 5 and 15-minute. You could be trading a 15-minute and a 60-minute, or you might be trading a 60-minute chart in conjunction with a daily chart. It depends what instrument you're trading, It depends whether you're trading a very volatile instrument, such as some of the commodity markets, or whether you're trading a less volatile market, such as stock market, such as, sorry, the shares, buying individual shares, because you can trade those off daily charts and go into the 60-minute chart then to actually use the 60-minute chart for your timing. So it doesn't matter what time frame, but it is very, very good to have the guidance chart in conjunction with the trading chart. Now, in this particular instance here, both of them are very much in sync from over here, but you can see that the red indicator on the 5-minute chart came in when the guidance chart was still in green, which is neutral. Now that's okay, but what you don't do is you don't take the sell signal on the trading chart if the guidance chart is still showing blue as it was over here. So you'd have to ignore those first couple of red bars, and you wait until it goes to definitely a neutral bias. And then of course, when the 5-minute chart in this particular instance went green, went back down into a red chart, you're stopping above the vertical bar trading pattern high after it making a lower confirmed vertical bar trading pattern high than this high. Therefore, you're into a lovely trade, and everything you were following sync, because the 5-minute chart now was in sync with the 15-minute chart. But again, remember, it takes patience to wait for that setup to happen. And if you haven't got patience, you're not going to be successful. So it does take patience. Now, sorry, there's some questions here, and I apologize if I haven't picked them up. I'm going to go and answer a question, Paul, to yourself. What risk-reward ratio do you look for? Ideally, Paul, I try to go for a 2-to-1. But if I see a particular market that I'm in, and I notice that it's struggling to get the 2-to-1 and I start consolidating. In other words, there's quite a few bars in a particular time frame that I've been trading it off, have been moving up a little bit, down a little bit, going sideways, in other words, and it may be struggling to hit that 2-to-1. I would certainly then pull my stop up to make sure that my trade, if I have a trade, for example, that is giving me, a decent amount of open profit, I certainly will not. I will not let that trade go into a losing trade. Now again, if you were trading based on the vertical bar trading pattern, there are times that perhaps if you were bringing your stop up, if it was a buy signal and you were bringing it up underneath a vertical bar trading pattern low, that you're giving away quite a lot of open equity. And it's based on the market and based on what you see in front of you. But if you're trading blindly and you're trading in a larger time frame and you're not watching the market, certainly try to go for at least a 2-to-1 risk-reward ratio is what I aim for most of the time. And again, there can be trades such as, if you get in a lovely entry point, which is what our aim always is, and I will demonstrate it before the end of our webinar, what it's all about, getting in with a low risk entry. But if you can get in with a low risk entry, it is quite very achievable a lot of the time, a minimum of 2-to-1. And just to answer your question, Joe, at this particular time, we haven't got a scanner within the software as we speak. But again, as you will see at the very end, any enhancements that do come on, and anybody that joined just now will also avail of those enhancements without any further charge or cost. What I do say to people, and it's a question that I do be asked reasonably regularly, and that is, what markets do we look at? And again, it really depends on what market you have been trading, or if you haven't been trading, Sue, which I see you're saying to me that you're new. Well, Sue, again, what I would say to you is, look at the likes of the FTSE at the beginning. It's not that volatile. If you wanted something a little bit more volatile, look at the Dow Jones. The DAX market as an index is very good. Look at the pound dollar. Look at the euro dollar. Look at a couple of other currencies that perhaps that are not non-correlating. Have 3 or 4 charts open, not too many at the beginning, even 2 charts opened at the beginning, and try and learn what the indicator is telling you, and then couple that with the price action in the vertical bar trading plan. And it really does not be a problem, to be quite honest with you. It really does not be a problem in relation to not having a scanner. at this stage. It's not a problem for the markets that we look at. Now, again, I have another example of a trading chart and a guidance chart. This particular time it's on the Dow Jones. Again, it's a 5-minute chart. Again, the underneath chart, as you can see faintly down here, is a 15-minute chart. Excuse me. Our first buy signal came in here. The 15-minute was red, so you're ignoring that bar on two fronts. Number one, you're ignoring it based on risk. And number two, you're ignoring it because the guidance chart is still showing red. Now it very quickly went into a neutral bias and the market retraced. And again, that's what you're doing. You're eliminating your risk. If the market retraces and providing the market stays, the instrument in your trading chart stays in the same color, you're then being able to trade off that based on a higher vertical bar trading pattern low. Remember, there's the last vertical bar trading pattern low. It comes down here. You're looking for confirmation of that low being in place, and you're trading that market. In this particular instance, there was a plus 84 points before the end of day. And it's simple. I know, excuse me, just take a drink, please. I know that financial trading can be difficult. And I'm not going to be here to try and tell you otherwise, but most traders make it much more difficult than what it is. And if you're patient and you trade with a methodology such as we teach, I can honestly tell you truthfully that you will be minimizing your risk when you're going into a trade. You will know exactly what your risk is when you enter that trade, and you will be able to hopefully trade with the trend if you have analyzed that market correctly. And that is all second nature once you get to know and learn the price action trading methodology. You cannot analyze it differently than me. And you're picking your risk and you're having patience to wait on a higher vertical bar trading pattern low, and your stops underneath that low, and away you go, whether that be a sell, whether that be a buy, and whether that be in a stock, commodity, or share. Some people turn around. I trade the crude oil market. I'm sure those of you that have listened to me before, but those of you that haven't, I do trade crude oil. It's a volatile market. Some people say, how do you trade crude oil? Because again, I trade crude oil based on a methodology which is available to all our members, coupled with our indicator. And therefore, at the time of my entry in crude oil, as volatile as it is, I know my risk. If it's outside my risk, I ignore that particular trade setup and wait for the next one to happen. Now, the three biggest mistakes that traders make. Now, I'm not going to dwell too long on this tonight because I want to get into the end of the webinar, show the vertical bar trading pattern, show a couple of other setups, how we can perhaps predict when a big move is going to happen, etc., in the markets. But I will. These are the three biggest mistakes that traders make. And remember, I'm sure you've heard it. 90% of traders apparently fail. And one of those reasons. The first reason is not having a trading plan. And why have they not got a trading plan is because they have not got a methodology to trade. And remember, what we teach is a methodology to trade that gives you precise entry and exit signals. So number one, to help you from being one of those 90% is have a trading plan. Have a methodology to trade, whether it be our methodology or whether it be some other methodology that you decide to know or you have been trading. Use that and stick by it rigidly. Number two is be properly funded and use proper risk management. And why I say being properly funded, because if you, as we've said now over here in the UK, for some of our American clients that are on here this evening, our friends rather, why I say UK is because you can now open an account from, I think, £100 probably in some of the spread betting indexes. Now, that's well and good, but even at £100 at £1 per point, you're not properly funded and you're going to be trading not in a relaxed mode. You're going to be trading in a pressure mode, and therefore if a market goes a little bit against you or a little bit for you, you're coming out, you're taking your profit or you're taking your loss too soon. Now when I say too soon, I mean, quite often you can see a trade going for you, or initially after your entry, it might reverse a little bit and then all of a sudden go for you and go and achieve its price action objective. Because remember, not every market or not every instrument will go up, will go straight up or go straight down. If it was that simple, everybody in the world would be at it. It doesn't do that. So therefore, you have to have your be properly funded, that you can trade with proper risk management that leaves you trading on a very much relaxed basis. And again, as I've said here, the risk management, if using a 300-point risk, this should be the same over all instruments. So in other words, if you're trading at 10 pounds per point on the FTSE 100, you have a 30-point risk. If the next trade you're trading on has only got a 15-point risk, well, again, you can up your risk. You can up your trade amount value to 20 pounds per point. But again, I'm not spending an awful lot of time on this tonight, but it is something to bear in mind. And again, it's something that we talk about quite a lot as members. Once people get into the trading scenario and understand our vertical bar trading pattern in conjunction with our indicator, then we say, right, what is your risk? Work out your trade size and what your risk percentage is. Is everybody following at this particular stage? Yes? Right. And have I missed any questions? Let me see. If I've missed any questions, I will come back to you very quickly. Don't worry, I'll do my best to answer all the questions. Now, on the third slide here in relation to risk, and this is again, is to trade instruments that are non-correlated. Trade a basket of markets that do not always move in the same direction at the same time. Always be prudent to spreads one. It's always prudent rather to spread one's risk. Now, again, if you're only new to the markets, you may be too interested in learning and looking at one or two charts, and that's quite fine. I understand that entirely, but I'm talking about for the more experienced trader. And once you get into the methodology, certainly it is very, very wise and professional to look at a couple of non-correlated markets. And the examples are the US dollar, Canadian dollar. It's obviously trades in the opposite direction to the euro US dollar. That's just a prime example. One market's going down, the other's going up. The reason that you're doing that is because the market that you're getting the buy signal from may not go up as much as the market that's coming in with the sell signal. And therefore, what it also does, not only is it spreading your risk, but it's also perhaps helping you maximize your profits, because one market may move further in that particular signal and the other market may move not as far. So therefore, if you're able to trade both from one short, one long, you're maximizing your potential on a non-correlated market. Now, what's important is putting all this information together to give clear trading signals using our price action trading method. Now, what I mean by all of this is you've now seen the indicator and we've talked about price action. And we've also talked about the three, very, very quickly, admittedly, this evening, we've talked about the three feelings that a lot of traders make. But getting very much into the price action mindset here, we want to put all this information to give clear trading signals. Now, this starts off by learning the basic vertical bars, by learning what inside vertical bars are, outside vertical bars are, and low volatility bars. Now, you might say, why is this information important to me? And this is what I want to tell you for. I'm giving you this information for a reason. And the reason that I'm giving you this information is that learning a simple single vertical bar, whether that's a bullish bar or a bearish bar, is very important, because what we do not do, whether we're trading our indicator on a blue big signal or a red signal, we do not take any buy signals that are giving us bearish bars. we do not take any sell signals that are giving us bullish bars. We have to trade in the direction of the bar and the time frame that we're trading of. Secondly, inside bars. Now there are some training out there available that people just teach an inside bar setup. And again, this is all what we do is actually teach all the aspects of price action trading, not just one. Inside bars are just one. Very powerful. They are very similar to low volatility bars, but not every low volatility bar is an inside bar, and I'm going to show you a demonstration of one next. And then outside vertical bars. And an outside vertical bar is when a bar makes a higher high than the previous bar and a lower low. And it's a very, very, very powerful vertical bar. And on some daily charts, outside vertical bars have something like an 80 or 82% success rate. It's something that I haven't checked, if you want to say for a better word, recently. But on some studies that I've done quite a few years ago, I think my outside vertical bars were coming up with about 82% accurate trading the Dow Jones Index. So I want to show you the information that is within those 4 basic patterns is the basics of price action, and it's something that was taught to me. It is something that you will learn if you become a member. It's something that so many people totally do not take any notice of, which is so wrong. No later than today, I was speaking to an American member, and again, he had been trading the markets, I think he said for a good 10 or 12, or he said a long time. I don't know whether he actually told me how long he had been trading the markets. And would you believe he wasn't even aware of what a bullish bar was or a bearish bar was, because he hadn't ever been taught that. So, and I know from past experience, and you may find this hard to believe, but I know from some brokers within brokerage offices in London that could not tell me what a bullish bar was or a bearish bar. They didn't know what I was talking about. But anyway, the reason we want to know those is because we only take buy signals of bullish bars, sell signals of bearish bars. And how do we trade inside bars? We trade them again if it breaks out to the high or low of an inside bar. But again, we have a set of rules that where we show this. But let's look at a low volatility bar, and let's just see how powerful it is. And what this also does, if you see an inside bar in the marketplace or a low volatility bar, what it's actually telling you is that particular market is going to make a move. It is consolidating. It's ready to make a large move. Now, why do we need to know this? Because if we see that, remember, I don't know whether I've said it tonight, but on many other occasions I've said it, reading price action is very much like being able to read a book, and it does tell a story. And this is why you have these little scenarios of learning basic vertical bars, inside, outside, low volatility bars, because that helps to form the story that that particular instrument in that particular time frame is teaching us. And then when we flick on our indicator, then we're looking to take signals based on what our price action is telling us. And that is the power of using the indicator with the price action trading method and the vertical bar trading plan. And that's where it really becomes powerful. And honestly, it is something that any of you wish to come on board will learn, and you will be quite amazed. It's like one of our members recently sent me an email to say that he's looking at the markets now in a totally different way and a totally different light by being able to understand the vertical bar trading pattern. In fact, I think I've had 3 emails from 3 members over this last 10 days or 2 weeks, very similar emails to that outline. So let's look at a low volatility bar and the power of it. And even this is now without any indicator, just looking at it on a daily chart. And this is the Dow Jones chart. And this slide, a snap of this slide was taken just this evening. And you can see, not yesterday, but 2 days ago, this bar here was a low volatility bar. What is a low volatility bar? It is a low range bar. That had a shorter range. In other words, the high and the low of that there was shorter than this range, was shorter than that range, shorter than that range, shorter than that range, shorter than that range, and that range. We can all see that. So that was telling me that the market had come down, it had come back up, and what had it done? It had actually made a low volatility day. because this is Dow Jones daily chart. And what has the Dow Jones done in the last 2 days since that signal? It has went 450 points lower. Now, the same thing can be said for inside bars, because inside bars are also usually, some inside bars recently with the volatility have had actually quite large range bars, but still it's the direction in which the market breaks out of those. Now, the information that's within that chart then is telling us that we're looking, whatever direction it breaks out on the low volatility bar, we flick over to a shorter time frame chart with our indicator on it, and we're looking in this instance to take sell signals, because it's broken to the downside of a low volatility bar. Therefore, the probability of the market now reversing is great. And it just so happens that I will demonstrate to you with the same slide very shortly on the vertical bar trading pattern what that was a double whammy here, which was a very strong signal. Now, what I want to talk about now is the vertical bar trading pattern. You've heard me comment on it on numerous times, and I just want to talk about it at the end, because it's this vertical bar trading pattern in conjunction with our price action, the basics of it, and our indicator, that really puts the whole jigsaw and all the pieces in place. Now, I'm just going to click, any questions? Mike, I use bars, and let me explain to you why I use bars, Mike. The simple reason that I use bars is because we are more interested in the close in relation to the high or the low of that bar, and we're not as interested in the close in relation to the open. Now, if you're trading candlesticks, a candlestick, whether that candlestick be red or blue, or whether it be hollow or whatever the case may be, is very much based on what the open is in relation to the close, or the close in relation to the open. And the reason that we do not look at that on vertical bars is because the opening price, and let's look at this logically and think about it. The opening price in any bar is the oldest price of that bar, whether that be a 5-minute bar, a daily bar, a weekly bar, or a monthly bar. Remember, if it's a daily bar, the opening price is the opening of that market this morning. But what we want to do is to adjudge whether there's more buying pressure or selling pressure in that market. And the only way you can do that is to see, is the close closer to the high of that market? And if it is, then there's more selling pressure, there's more buying pressure, apologize. If it's closer to the high, there's more buying pressure. And if it's closer to the low, there's more selling pressure. Now, it is not as important if the close is above the open or below the open. The importance is if it is closer to the high and closer to the low. But yes, if you do get a close that is closer, is above the open, you get a close that is above the mean, which is the midpoint of the bar, and a close that closes closer to the high of the bar than the low, well, then you've got 3 factors going for you. So therefore, the probabilities of that particular market, if assuming that was a daily chart, breaking out to the upside rather than the downside, apologize here, it's just my chart is coming up, and I'll just minimize that. The determination, that's giving you 3 factors of price action for the probability of the high to be broken first of the next bar is much greater than the low of that particular bar to be broken. So I hope you understand that, Mike. It's simply because it's where the close is in relation to the high and not where the close is in relation to the open. Now, the vertical bar trading pattern, every time we're getting on here, it's 9 o'clock, and I apologize for keeping you back. We'll try and wrap this up pretty quickly, but it is important. Every market top or bottom cannot be confirmed in place without this pattern being in place. All members are taught exactly how to ascertain if a top or bottom is confirmed. We have a unique way of confirming whether a vertical bar trading pattern top or bottom is in place. And that's what makes us stand out from the crowd, if you don't mind me saying that. We have a unique way that determines that on a real-time basis. Trading the vertical bar trading pattern with the trend is a powerful way to trade in its own right, but trading it with the indicator gives you, the trader, a real edge. and I can prove this day after day, chart after chart. We can go on and I can prove it time after time. I can't stress that enough. Now, what is the vertical bar trading pattern? And I have just highlighted what it is in the blue dots. Some people might call it swing highs and swing lows. Now, as I explained to my American member today, anybody after an event that has been trading for some time can turn around to you and say, oh, there's a swing high, there's a swing low, there's a swing high. Of course we can, if we have some experience in the markets. But you only can do that. Most of them can do that at the end of the trading day or the end of the trading period, looking at a graph in the past. But what is different is being able to do it on a real-time basis and know to the exact point and the exact place that you've got the middle finger. If you look at your right hand, the middle finger high in place or the middle finger low if you point your finger down to the ground. It's when you know that that's in place. That is the difference. That is the real difference. Let's look at this in a real-time chart. Again, this is crude oil, volatile market. You can see the market come up here, vertical bar trading pattern high, vertical bar trading pattern low. It came back up again and made a lower vertical bar trading pattern high, so therefore it's been trading changing trend. And by the way, this is not with any trend indicator on. This is just the bars in relation to the why it's a blue bar in this particular instance is because the close is above the open. Okay, so please don't get confused. This should have really been on a green chart. It was just I took a snippet when I was putting this chart up, and I must change it. I took a snippet from NinjaTrader, and their default setup is red bars if the close is below the open and blue bars if the close is above the open. So the market then came back up. It made a lower vertical bar trading pattern high, came back down. We got a beautiful sell signal in around here where that confirmed high was in place. And bang, what happened? The market went down. And remember, every point it moves here is $10, and that market went from a sell signal just about 72.90 the whole way down to 71.90. So you had $1,000 there very, very quickly. Now the trade I done yesterday wasn't as quick as that, to be quite honest with you. It was actually very much. It was about a 20-minute period where we $700 or $800 locked in. And my own account, I let the trade move on, and it actually. I'll not tell you what it made, but it actually done very, very, very well on my own trading account. Now, again, what I've done here, the Euro US dollar chart, again, what have I done? I've highlighted in the red dots the vertical bar trading pattern, highs and lows. And remember what we're trying to do, we're trading with the trend. So if you see a trend, it always gives you price action objectives if you're trading with the vertical bar trading pattern trend. So if you see the market coming back down and making a vertical bar trading pattern lower low than the previous low, which it was here, after making a higher high, the market has changed trend. Any retracement then, you're looking for that market to trade a lower low. And in this instance, it did make a lower low. It came back up, but didn't go as high as that particular high. A lower high. It made a lower high with the objective of it coming back down and breaking this high. But this is where the markets went sideways after the big fall. The market came back down. It made a higher confirmed vertical bar trading pattern low. That low was a higher low than that low. Therefore, we were expecting now the market to go up. But this is why when people turn around to me and saying, predict the bottom of the market or the top of the market, and this is why I say, trade what you see. We're trading what we're seeing, but we're not predicting, but we have a methodology based on what the market should do. If it doesn't do that, we're in a trade where we are totally comfortable with because we entered that trade within our risk boundaries. And if that trade works out for us, fair and good. If it doesn't work out for us, well, lo and behold, we're pretty confident that our next trade will. But this market came back down. It made a lower vertical bar trading pattern high than that high. It then should have made a lower vertical bar trading pattern low, and lo and behold, it did in this instance, went back down, broke that low, went lower, went back up. Now, when you're trading this here, the same pattern applies, although this is a daily chart, the same thing applies on any time frame chart. On any time frame chart. The market went back up. We were not hoping, hope is the wrong word, I apologize. Our aim, based on our price action vertical bar trading pattern trend, was for the market to come and make a lower vertical bar trading pattern high. The market took a rally up, and even after this market, it went back up. It couldn't break that particular vertical bar trading pattern high, and the market went back down and achieved its price action trading objective based on the vertical bar trading pattern trend. Now, this is the particular market that we looked at earlier with the snippet over here, and this is the Dow Jones, and this shot was taken earlier today. The market has went lower than where it has been taken. Again, you can see what we're doing. This has behaved very, 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 very well based on the vertical bar trading pattern. So we've got A trades the whole way down. I went and made a lower, changed trend once it broke this particular low. Should it come up, made a lower vertical bar trading pattern high, it made a lower vertical bar trading pattern high. Remember, all this is information. This is all part of the story within price action. And then you can flick to your lower time frame charts to pick your trades based on what the bigger time frame is telling you. It's a powerful way to trade, ladies and gentlemen. I can't stress it enough. And anybody that does come on board, providing you learn it and trade the rules of it and manage your risk based on the methodology itself, I honestly do believe that you would be making a terrible job if you couldn't make money. It'd be a terrible. You'd be making some terrible decisions. You wouldn't be trading the methodology, put it like that. But again, the market came back down, lower vertical bar trading pattern high than this high. The objective was to take this low out, went back down, took this low out, come back up and made a lower vertical bar trading pattern high. Now let me tell you, each one of these that I have marked are confirmed. I'm obviously not going to tell you tonight how we confirm them. That is something that you learn within our members area, but they are confirmed. Right? Once I put a dot, they're confirmed. The market came back down, made a lower vertical bar trading pattern, confirmed low here. And with it making a confirmed lower low, we were expecting any retracement for it to make a lower confirmed trading pattern high. Now, some of you might say, is that not a high there, that bar? No, that there is not a confirmed vertical bar trading pattern high. That there bar might be higher than this high, but that was not a confirmed vertical bar trading pattern high. But again, anybody that knows us or any members that's on tonight, I don't know whether we have some members on or not. If we have, you will be able to back me up and you will know that there is not a confirmed vertical bar trading pattern high. Now, this particular bar, I have put this in before I took the snippet of this particular chart before we put it on the presentation. And the reason I've done that is to show that we are now, we would have made a confirmed, this has been a confirmed vertical bar trading pattern high based on today's price action. So therefore we've made a lower high, a lower low, we come back down. If that was a lower high, we'd come back down to break this particular low. What has the market done? It went and achieved that objective because it went, that's 17,080. I know at one stage it went to 17,046, and I'll take a look at the low, and it's at 16,990 it is closed at. So there's the chart, exact chart, live chart. So this is all in the power of price action. In fact, the market's down 358 points. So it is, ladies and gentlemen. Now, Mike, when do I make those confirmations? You make those confirmations, Mike, you will see those confirmations exactly in a real-time basis. You will know exactly when the confirmation is in place. You will 100% know when the confirmation is in place. Now let's just go to the next chart, or the next snippet. Sorry, have I moved out of my particular presentation? I apologize. Now, our aim as traders is to enter a trade with as little risk as possible. Remember, risk is the only thing that we can control. The only thing that we can control when we enter a trade is risk, and we must remember that. And time's gone on now, ladies and gentlemen. I've overrun, I've spoke too much. I'm too good at speaking, and I hope you've taken it all in. I hope you find it worthwhile. But let's finish off our slides. And what I mean is, this is what the vertical bar trading pattern objective is. We're trading here. The market comes back up. We're waiting for the first retracement to trade with the trend, providing if this was the indicator, those bars assume are now turned blue. we're looking for the first retracement. We're taking our signal in here of a blue bar, our stops in there underneath the low, and we're looking for that market to make this particular pattern to go on up. And again, what you can do, you can move your stops up. If the market goes up under each vertical bar trading pattern confirmed low, you can drag your stop up. Again, if the market was going away on up here, and the last particular vertical bar trading pattern low, well, sooner or later it's going to go back to the mean. Therefore, you can drag your stop up behind it. So you could maybe, first of all, you'd move it from underneath here to here, because that was the last support, last resistance, and once it broke up through that resistance, that becomes then support. And the same in the downside. Market goes down, back up, you're looking to take your sell signal in here with your stop just above the high. And this is all based on a middle finger. Look at your hand, hold it up to you, and look at the middle finger high. But this is the objective of what we are doing within our pattern. Now what we're offering our unique STB trend software that visually colors each bar, that indicates not only if there's more buying or selling pressure, but also indicates if there is a neutral bias. And we're certainly offering, which is very important, it's not just the indicator please, it's the professionally delivered training where you will learn the complete price action trading method. And this obviously includes the vertical bar trading pattern. You will also have access to regular training webinars where you're able to interact and continually learn. And most important is our continuous email support and telephone support if required. Now, when I say telephone support, I have to say that telephone support now has become a key ingredient of any of our members, to be quite honest with you, because certainly it takes at least a couple of calls to go over not only the indicator but the vertical bar trading pattern and trading it in conjunction with the indicator. And what I do find, first of all, what members do, they come on board. I encourage them to watch some of the videos that's up on the site in the members area, to learn the vertical bar trading pattern, to get a feel for the software, and then for us to speak on the phone, go over some charts, go away then, look at that particular discussion and try and take as much of it in as possible. Sometimes the first phone call can be quite absorbing. There's quite a bit to learn in that respect. And then what I do say, in a week or two after that, or whatever time frame, the person is quite confident or quite comfortable to come back. Look, if they need to speak to me again, or numerous times, I'm here to help. If it's not through Skype, it's through ordinary telephone. We can load a chart up. We can load the same chart that you've been looking at up, and we can just discuss it on a real-time basis. And I think that there is being all of our members are finding that being very good. It's usually done with myself. If it's not myself, it's my colleague Saf, but most of it I try to do myself. Now, I'm pretty confident that anyone joining us will greatly benefit from what we offer, and I mean that. I am confident that if you come on board and learn our methods, I will be massively surprised. I will be massively surprised if you cannot come and make money out of what we actually teach. The choice is yours. As I say, it's either to make the change or to continue doing what you're already doing if you're existingly in the market, or if you wish to look for something else, you're more than welcome to do that. There's a large choice out there. As I've said before, the internet has so many advantages, and unfortunately there's a few disadvantages in there, because the choice can be that great and you don't know at times whether you are picking the right particular company to go with or the right particular training. You can read books, it'll take you many years, and the good thing about learning from the likes of ourselves is we're probably putting a shortcut in place, so to speak, because that shortcut is giving you a methodology that we know does work, and therefore you're not having to look at this and learn something else and learn this and hit and miss situation. You're getting into the middle of it. You're getting right into the middle of the pie, as the saying goes, and you're learning from the outset. Now, anyone who joins us now will receive any new updates to the software all free of charge. Now, when I say updates, there will be no updates as in relation to the signal, to be quite honest with you. The signal will be the signal. That is based on price action. That will not change, but where the updates might arrive, if, for example, on the MT4 platform, There are three platforms that we've got our indicator for at the minute. One of them is MT4, the other is TradeStation and NinjaTrader. And the platforms is the platform where the data comes in that you can load your instruments and you put our indicator on top of that. But on MT4, for example, there is an automated, they have got what you call EAs, which are expert advisors, where you can load them onto a chart, a particular method, and you can fire the orders directly into the broker for you. That is something that we have been looking at. It isn't ready yet for release, but if that did come on board, it may be of some benefit to you. Again, any pity that joins us at this particular time will receive any updates such as that, or such as a scanning feature, etc., etc. All will be free of charge. There will be no charge for any of this. It is a one-off cost. It's not a leasing charge. And remember, as you'll always have access to our members area on our website for continuous training such as video updates, etc., etc. This complete package is presently reduced from $999 to $499. It will be $999. It is not $999. I'm not going to tell you when it will be $999, when we have the EA, etc., etc. in place, and we're content with that, and perhaps a couple of different other scanning features, etc., etc. We will certainly be putting the price of the software up to $999. It is worth it. Easy for me saying this all day long. The longer you leave it, the greater the opportunity you're leaving behind. People wait and wait and wait, and I'm not saying I didn't do it many years back, long ago myself, but really and truly, grasp it. It's there. It's £499, and yes, after the training, you would be making a pretty bad job if you cannot start making money out of what we have. Now, if you want to become a member, first of all, you click on the menu bar, go to beawinningtrader.com, click on the menu bar, click on software, and in there you will be able to create your own password, you're able to pay for the software, etc., etc. What we will then do, we will get an email, we will then activate your account, and the software file will be sent to you for the particular platform that you are going to use it on. Now, if anybody has any questions, remember it's Ian, IAN, at beawinningtrader.com. Or again, you can contact us by phone. I'm out of the office now tomorrow. I'm away tomorrow most of the day, so I'll not be in the office tomorrow. But again, if you send me an email, any questions, I would love to have welcome members, new members onto us all the time, and I'd be pretty confident that I can help you be a winning trader. Thank you all very much for attending. Now I'm just going to check the questions here to see what we have. Yes, Mike, that's inclusive of that 100%. It's a $4.99 cost at that minute in time. So it is. If I can be of help, as I said to you, all I can really say to you, if I can be of help to any of you in any questions, please, please just ask me. If there's anybody wants charts, etc., etc., you're more than welcome. I can send them down to you. It's not something that's going to work today and not work tomorrow. As long as there's a market, it's going to work. The same indicator and the same methodology will work when I'm long gone, or we're all long gone out on this earth. We've all moved to a better place. Let me assure you that. But look, all I can say, sorry for going 20 minutes over, and it's very kind of you all to have stuck in with me. I think we've everybody more or less that's been here. Thank you, Jane. Joe, yes, a couple of ladies in attendance tonight. Thank you very much. Thank you, Mike. Thank you for the questions. Joe, Paul, thank you very much. And again, look forward to seeing you in our next webinar, or seeing you as a member. Thank you very much now.